Alright, so this is a voiceover. So this is a sped up trade. Okay, so there I'm having 30 contracts buy on the micro E-mini Nasdaq 100 futures. This is an order block entry, so I entered 30 contracts at that volume imbalance. Those two red lines denoted down. That is an order block or a change in state of delivery. So rally, I got a nice fill on that entry. So today I took 3 trades. One was a break-even trade after taking a partial, and then the second trade was a loss. It was a $300 loss. Then this is the third trade I took, but the 2 trades I took before were minimum risk, where I de-risked and was risking only 10 contracts per trade. But this last trade I was so sure about it because it's a protraction model and I'm more versed with this. Today we had unemployment claims, so I was using that news candle. There I have taken a partial. Stop loss is being set to break even and securing the commissions. So I took a partial at the sweep of that previous high, and I was looking to take another partial at the extrapolation of this price leg. You can see the trades I took before here. So at the negative 0.25 of that price action leg, so that's where I was looking to take my second partial. That there is a breakaway gap. I was looking for that to be left untouched or unfilled to show bullish momentum, but luckily the market did what I said, what I anticipated. So that high is break of structure and our partial right there as marked. Just like that. So it's a fair value gap, fine, but I don't expect the market to fill that in. So roll time, this is not after it happens, so this is anticipating price movements before they happen. So that was our first partial. Got a bad fill. It was the market wicked above the high and I didn't have a limit set there, so that is it. Up something like $630 on the 20 contracts left, but I took a partial. So I've been in drawdown for that loss. I took it was a $300 loss. It was a big loss. I was there you have your next partial, just like that. So I'm looking to collect my left trades before the retracement, because I expect the market to retrace from that, but I'm looking at bullish PDRA. So any bullish PDRA that is disrespected is a partial for me, so I'm willing to collect 5. So that worked as I anticipated. That's a breakaway gap. I prefer that to have stayed open. Okay, just like that. And I'm looking to close and manage the remaining 10 contracts. I want something like $400. So I'm looking at that fair value gap right there, that bullish fair value gap, and there is a tiny fair value gap. So I'm moving my stop loss to the second candle of that fair value gap, the low of it, as you can see right there. There is a tiny fair value gap where the market is. If I'm to measure that move, that would have been my next partial above that high, that current high, that was to form all the order block. So I'm having that tiny fair value gap. Any PDR that is disrespected is a partial for me. Okay, so we are looking to closure. Now this is how you manage trades. So I'm looking at body closures, not wicks. Wicks can do the damage, but the bodies tell the story. As you can see right there, looking at candle closures. If any bullish PDR is disrespected, I'm looking to partial. Okay, so as you can see, the bodies did respect that fair value gap initially, but then the retracement went far down than I could handle, and I had to close. The market started rallying down just like that. So if I had forgotten to set that at 10, so that took off 5 there, that closure took off that, so left with only 5 contracts to manage. I wouldn't want the market to drop down back into the breakout gap, so I was willing to close those remaining 5 contracts at $100. That's what I was aiming for, and we kept on playing at the 87, 97, 90 mark. So position closing soon, and just like that. That is a good trade, guys. That is a very beautiful trade. So after that, I'm not looking at anything else. Okay, thank you.